Everyone is saying the IRS just launched a secret AI system that automatically audits small business deductions. That is not what the public evidence shows, but the real story still matters. A March 2026 report from the USGAO found that the IRS had 126 active artificial intelligence use cases in its internal inventory as of June 2025. Some were operational, others were still in development. Some IRS AI use cases review large volumes of data, including submitted tax returns, to help identify work that may carry a higher risk of non-compliance. In many compliance and fraud detection use cases, AI provides a risk score or recommendation. An IRS official then reviews the output and decides whether to pursue an audit or investigation. That does not mean every tax return receives an AI score. It does not mean AI automatically audits you. And the government has not publicly disclosed every factor used by every IRS model. What we do know is that technology can help the IRS prioritize certain compliance work. So what should small business owners do? Do not stop claiming legitimate expenses out of fear. Instead, make sure your deductions satisfy the applicable rules and are supported by reliable records. Here are 5 areas where documentation matters. First, business use of your home. The IRS generally requires a qualifying area to be used regularly and exclusively for business, although limited exceptions apply, including certain inventory storage and daycare uses. Under the actual expense method, the business percentage can be calculated using any reasonable method. Common methods include comparing the office's square footage with the total home, or when appropriate, comparing rooms of roughly equal size. Keep the calculation and the records supporting the expenses claimed. Second, vehicle expenses. A fuel receipt establishes that fuel was purchased. By itself, it does not establish the business mileage for a particular trip. IRS guidance calls for records showing information such as the date, business destination, business purpose, and mileage for each business use, as well as total annual mileage. Ordinary travel between your home and regular workplace is generally personal commuting, although particular home office and temporary work location rules can affect the result. Third, business travel. Travel expenses generally must be ordinary, necessary, and connected to business travel away from your tax home. Keep records showing the amounts, dates, destination, and business purpose. If a trip combines business and personal activity, the deductible amount depends on the facts, the destination, and the applicable allocation rules. Simply performing a small amount of work during a primarily personal vacation does not make the entire trip deductible. Fourth, business meals. A potentially deductible business meal must satisfy the applicable requirements. Generally, the taxpayer or an employee must be present. The meal cannot be lavish or extravagant under the circumstances, and the other participant should be a current or potential business contact. Keep records supporting the amount, time, place, business purpose, and relevant business relationship. Business meals are generally subject to a 50% limitation, although exceptions can apply. Fifth, material business expenses generally. IRS guidance says a deductible business expense must be both ordinary and necessary. Ordinary means common and accepted in your field. Necessary means helpful and appropriate for the business. It does not have to be indispensable. A charge appearing in a business bank account does not by itself determine whether it satisfies those requirements. For travel, vehicle, and similar substantiated expenses, the IRS says timely written records generally carry more value than statements reconstructed later. When accurate recall may be difficult, that does not mean every missing receipt automatically destroys a deduction. IRS rules recognize limited circumstances involving incomplete records or alternative supporting evidence, but contemporaneous documentation is usually the stronger position. The key takeaway is not that an algorithm has eliminated valid deductions. It is that the IRS is using AI in parts of its compliance and audit selection work, while ordinary tax substantiation rules still apply. Claim what the law allows. Keep the evidence needed to support it. Before filing, review your home office calculation, mileage records, travel documentation, meal substantiation, and other material business expenses. Ask yourself, if this expense were questioned 18 months from now, could I establish the amount and its business purpose without relying entirely on memory? That is the review gap WealthRx is being built to address, helping business owners and accounting professionals identify inconsistent classifications. Missing documentation and financial review issues before filing or financial review. Comment Audit and I'll send you the Small Business Documentation Readiness Checklist. Follow WealthRx for practical financial and tax risk education. This content is general education, not individualized tax, accounting, or legal advice.